Hey everyone, welcome back to CryptoCache. Thanks again for joining me here. Hope you're having a great day, night, evening, morning, whatever it is. I hope it's wonderful. We're going to take another look here at Bitcoin dropping again. We discussed earlier today that it's a strong probability that we do see this confluence here at 0.618, both on larger and smaller time frame fib levels. Kind of that $66,000 support. So there's a solid chance that'll be the bouncing point or the lowest point that Bitcoin goes in this first trend to the downside if that happens again. We're going to talk about liquidation and kind of what that looks like too, because there is still more liquidation on the downside now that we're leaving that heavy concentration above that's been swept, which is that $70,000 mark. So if you're new to the channel, thank you so much for watching. If you've been watching for a while, thank you even more. We've got some phenomenal viewers here lately. I can say they came out of the woods here just backing me up with that plagiarism issue and a lot of different things there where, people were stealing my signals. They probably still are. We're just not aware of it anymore. And kind of, I guess, imitation is the most sincere form of flattery, right? That's how we got to take it. But the key takeaway here isn't imitation. This is basically a lower level liquidation. And what we can see is there's a strong amount of longs here at this 66,500 mark, thinking that that's the bottom. Okay, now I don't personally think that just based on the way that things have behaved in the last 48 hours. I mean, dropping from 70K to 66.5, that's a pretty significant drop. And it doesn't, common trading techniques are designed, or more so just, you can extract that based on those techniques, it's common for price action to continue lower now that we've dropped. In fact, we're working ourselves into this bearish rectangle, which worked perfectly for us with our AVAX trade here recently. Anyways, this is a conversation for another day, but we took some, it was an ICP trade rather. We took some nice profits on ICP, mainly because of that bearish rectangle, and we're starting to see one right now. Okay, so it would make sense for the price to come down lower. It doesn't have to drop significant to 60,000 to fill that CME gap, which is still a very real thing, but it could drop to this more recent level, because we do have a new CME gap, in case you're not aware, at 65,800, upwards about 66.5. Okay, so again, and you're probably thinking to yourself, wait a minute, I thought 66.5 was swept. Not exactly. The CME charts are a little different than, futures rather, they're a little different with that than a traditional charts. I'll explain. I can explain another time. I can assure you though that level is an important thing to note. I think there's a strong chance we will see that 66K mark. Anyways, there's just some confirming factors that we're seeing. All right. Enough about that. Sorry, I get off on tangents sometimes. I apologize, but it is all fairly relevant too. It's not like it's completely out of the ordinary. Anyways, this arrow was designed to point out these key fib levels, which I'm going to talk about here in just a moment. First things first, though, on the daily, just to kind of recognize a few important things. We're still bullish in the overall sense. We're still honoring our ascending trend line. The sky is not falling yet, folks. It's okay to be temporarily bearish on a coin, even if the price action isn't going to go, even if the macro still looks good, rather. Okay. Again, truth be told, we tried to short Bitcoin at 68,500. Price just continued to run. Okay. So we would have hit our take profit targets had we got filled. Not like that's great or amazing, but we've been expecting the coin to drop in value, and it just makes sense. We've got a pretty massive bearish engulfing candle here. Again, we got less than hours left in today's trading day, and we can see that we're trending towards 50 in the RSI. Generally, 50 is going to work as a support level on the RSI. You can see if you're above it, you're doing good. If you're below it, you're doing bad. It's really the general consensus. So we haven't broken bad yet, so to speak, and we are stochastically swinging down, and the money flow index is coming with it. MACD is trying to diverge, but hasn't yet. So we got some proof here letting us know that this downtrend is warranted, right? We've hit all of our legs up, so to speak, on Elliot Wave when we discussed this previously, and we're probably on our ABC pattern here too to the downside. Just a natural corrective cycle that occurs pretty consistently in trading. Either way, at this point, if the price pulls back, how low is it going to go? That's the question I'm getting all day long. And the easy way to understand it is, first of all, I've got larger fib levels here pulled up, the macro fibs, right? We can see this 0.236 level at 66,100. That's been pretty consistent for a while. And that 0.236 level, even though it keeps moving up, every time we move it up, that 0.236 keeps getting retested, okay? So the reason why that's important to note is because if you draw out smaller fib levels, which are drawn out here, by the way, they are basically drawn out from the more recent low to the more recent high. If you zoom in, you'll see 0.618, 0.65. That is the golden pocket. That's a common area of retracement. That's generally where you're going to see the most amount of support. So with us retesting that 0.5 fib level a couple times here today, and we can see 3 strong red candles here so far. There's a good chance we're going to see a bit of a relief rally and or a retest of that level and potential continuation higher. Again, that would still honor the ascending trend if that happens in the near future, so I welcome it. I would love to get a long in at 66,000. Okay, so again, that's generally what we're looking at here. 4-hour time frame though, just to clarify, we have broken bad, as I kind of mentioned earlier, or bearish rather. We can see we've closed under officially and started a new candle under 50 on the RSI, stochastic swinging down, money flow index is low. These are all common characteristics for a divergence. Big surprise, we're diverging on the MACD as well. So I think this has more propensity to continue lower, and that we're just getting started. If it does go much lower, to clarify the key fib levels, just so you're aware, the more significant one would be 63,500. That's this most recent low, and that's also the 0.382 fib level on the macro. So that to me would seem like a sensible area of retracement if we lose that $66,000 mark. Okay. Now it may not just shoot directly to that level, but it would make sense for it to do that. We could even be seeing, you know, the start of Head and Shoulders. There's a lot of different things that could be happening. Again, this is it's fairly premature, but based on the macro telling us it's slightly diverging and the 4-hour telling us we're definitely diverging, we look at the hourly here. And we can recognize, looking at the Ichimoku cloud, that we're well below the cloud, and that 68,500 mark is a new resistance. We tried to short from 68.5, but the price kept running, right? I honestly, when I reviewed this earlier today, I thought we'd get a little bounce off this fib here to come back up and retest that more recent high. Because if you zoom out, you can kind of see here, that's our local high before we broke to the 70,000 mark, okay? So 68.5, to me, I feel is still going to work as a resistance if the price continues higher from here. So if we get dead cat or whatever you want to call it, basically just a bounce from here, I would expect some resistance at 68.5 and then a likely continuation lower from there. So we will see. So the price pulls back to 66,000. I'm going to be interested in a long position just to kind of test that support range, just to be, you know, it's common to see bounces at those levels. If the price does end up rallying back, I think a short at 68.5 would be appropriate as well. Again, we don't just blindly go into those. We're going to reevaluate when we get there. But right now, those are the 2 areas I'm considering at this point, depending on obviously how the price action plays out. But yeah, there's no other way around it. We've broken absolutely bearish on the hourly, 4 hours mostly confirmed. The daily is kind of just lagging behind. So that does imply we're still bullish in the overall sense. It just tells us we have short-term bearish qualities. So whatever that looks like to you, that's what it does to me. So I hope that made sense and I do describe that correctly. If I don't ever, please feel free to comment below. I'd love to hear your thoughts. It is funny to hear some people's comments. More importantly, it's very endearing rather, because majority of folks are super supportive and I'm very, very thankful for that. So thanks for not being trolls in our community here and being just good, honest, open people. And if there's ever anything I'm doing wrong, obviously let me know. Feel free to mention it. I'm more than willing to calibrate, and if you're part of my community, you'll know that we consistently adjust, because you have to with the market. The market gives you crap sometimes, and you just have to kind of deal with it. You got to shovel through it, okay? Either way, this is not crap. This is actually good, because we've been shorting on the way down, and it's really not a problem at all. Just be careful however you look at it, and I do deeply appreciate you watching once more. Thanks again so much. We'll look forward to seeing the next one. You will see our playout chart posted here on our Twitter, Telegram, and Discord here shortly. Thanks again. Take care.